Hey, g'day traders, Sam here from Trade to Prosper. It's been a while, and if you can listen to the tone of my voice, I've been sick and I've got a lot of coughing, so it's not a good time to make a post with where speech is bit of an issue. So bear with me with my voice. The more I talk, the likely that I'll cough. So you just got to bear with me as I explain the chart. I am bearish, and I'll explain why for the short term anyway. So if we look at this macro uptrend, this looks like a wave 5 from that perspective. If we look at this level of interest, and if you look across Bitcoin from a macro perspective, and they should come up, and I explained this before, historical lows over here, this level was a level of support, and over there, and fundamentally here as well, and therefore that acts as resistance. Basics, right? So that is our macro neckline, and that is a rejection. And I doubt it that we're going to make any new highs anytime soon, and I'll give you the reasons. So if I was to just take this out of the picture for a sec and come in close, what we had here, if you look at this one here, we're at a wave 5, and then we had our ABC correction. And then realistically, we had another wave 5. Okay. Not as clear. 1, 2, 3, 4, 5. And I'm expecting another ABC correction. So if we were to just do that, the question is, where is the ABC going to go? This ABC, that could be an ABC correction easily, and that is that. Or we have a deeper one, where that is the A, that is the B, and so on. So that is the dilemma at the moment. We're going to explore this in a number of ways. Here we've got the 50 weekly, the daily moving average, acting as support, and it's also a major Fibonacci as well. And you can see from the daily perspective, we've got the 21 daily moving average, and we've also got this one here, the 4-hour 200 SMA, crossing over right there. So at this level, that was significant resistance, will be significant resistance again. So, and you got the moving averages coming together. So if price was to come here, this is a perfect spot to short, guys. I will be shorting if price comes there. So I will place my orders there to short if there was a bounce. Now, what are likely chances of this area finding a bounce is probable. Now, what we can use this previous reference here. We had price that comes down, finds a level of support, and you got this bearish flag, and then further down, and that's our ABC correction. So we've got something like that as well in the making. Now, what kind of formation would it take? It could be something like that, or flat, and I do believe this level is going to be a major support. Why? Because of this. Give me a sec for a cough. So this level is significant. So even though the 50 might not hold it, I do feel like that there could still be a bounce and then come back down. And this is the level that I'm looking for, a bit of an entry there, because this was a significant level of resistance. If you can see, resistance and pullback was deep. Major level pullback is deep. So we're having an ABC correction. Here, I'll be looking to short right there and then further down, guys. Or we get that type of W, all right? So I am looking at this level to be retested. A lot of entries, lots shorts are going to come in, and this is going to be the next test. That is one scenario that I'll be looking for. If this was to get up to this level, I will shorting it, or we'll be watching this level here, because the mean is there. So let's have a look at that close up. Let's get our volume profile. Okay, so that level there, volume of point of control, is likely to be resistance as well. Give or take a little bit. So we might not get past that. Now let's apply a few Fibonacci on this. All right, we've got a number of perspectives, right? For short entry, either there, and it's worth the risk. Even if it goes above it, it's still worth the risk because this is a strong resistance. And so even if you take a short there and it keeps going up, your stop limits, it should be safe. And if we add our Fibonacci, let me see where that Fibonacci is. No, not that one. Where's that one? Okay, here we go. So we're on our daily chart. Hold on, let's just get rid of that. So if we look at this Fibonacci, if we assume that's where it is, give it take a bit, 0.236, one up there, okay, and you can see roughly the 0.382 could be resistance right there, or the 0.5 where the wicks are. But I like the idea that the moving averages coming down right there is a good spot to short, and preset, that's pretty much it if this is a bounce. Now what else is going to our favor as this formation looks like bearish structure? So here we give you the reason for shorting entry, and if you look at this level, give us a sec. No, I'll just use it there. If we were to assume that this comes down to this level, it still doesn't change. It's still the 0.5 Fibonacci. So if we were to get a wick, and it's very possible that we just wick down and then go back up, here is likely to find resistance. Yep. There is supply demand here. Even might just look for liquidity down here as well. So it might just wick down a bit lower and then back up because all the stop losses are there for the longs, and this could be a situation where they get that and then we go back up again. I don't expect it to go really high. I expect this area to be resistance and then there, and then we've got our A, B, C completion. So there's a few ways of looking at the Fibonacci on this one, and that works. So if it comes down to this level, we'll get our 0, we'll get our 0.382 or the 0.5 aligned perfectly. Now there's another aspect to this, and let's just try that out. Where's my major fib? This one here. If I use the top at 0, and if you can look at how I fit in the 1.618 all the way to the bottom, again, if price was to come down, hits the 0.618 level. Even the 0.68, again, good support. So Fibonacci wise, that makes sense. You can see also the 0.382 is lined up with this level. And you can see the 0.236, perfect level. So this macro Fibonacci is aligned as well. And if you look at the 1, perfectly there, the support, 0.1 perfectly there, there you go. So even this one, 1.412, there. So we've got these moving averages. This is a 21 monthly moving average. And if you look at this, it's actually aligned to that level as resistance. So this is really acting as resistance as well. So I don't think we can close a daily there above it. I think it will only be a wick if it was to go up. Just a movement. And if we look on the small time frame, let's have a look. Not looking good at all. So this is likely to come down. And so looking for a long, pretty much makes sense. Yeah, what we have is something ugly. There we go. That's the top, bottom range, and that's the top. And we were talking about that last time on our channel. So let's just do this. You can see the range. We have this level, and that's pretty much major resistance, give or take a bit. So this section, here's a wick. We've fulfilled that one right there, right? And we've got this other level, sweep of the bottom, and that's what I'm expecting. This is like a bit of a bear flag of some sort, not the best, but I think you'll just tire and down. So we got our first touch. You can say second, third, still got a few more to go before we drop. Or it just goes down now. Got the 1, 2, 3, or the 1, 2, 3, 4, 5, and down. And in that, we might just get a sweep to the top right here and then back down again. Bit of a fake out, and then we got that broadening structure. So number of formulations can take place there. Now let's go back to the daily and look at it from another perspective. Now here's the other perspective. If we were to align this rising wedge, so let's just take this out of it. This is a macro trend line. So it's an important trend line. Resistance, resistance, and support all the way. And now it's a resistance. So if a price comes here, another reason. So the trend line is also a resistance and for come down. We can look at that from that perspective as well. Again, strong resistance. The other aspect is we've got this one here. Got that one. Let's see. Give me a sec, guys. So top gives you a reason why it's resistance. So we start with that. And we can use this bottom line, actually this one here. And you can see it fulfills a rising wedge scenario. So we got this. A 1, 2, and maybe a small one like that. Not the best drawing, but bear flag and down. And what it's likely to do, if this is a rising wedge, guys, and we come down, like I said, find the resistance and comes right down. This is a classical setup for a rising wedge continuation downside. So if we were to do this, we'll probably get a good bounce, and usually it's around there. We find this level to be a major shorting position because it's a rising wedge structure. And the last time we saw that was up here. So if we were to just demonstrate that for you, we had a rising wedge here, just different. And when we break that rising wedge, you can see we hit a support level of some sort, find the bounce, and then the classic level of resistance, and then back down again. This was a strong bounce, strong capitulation, and a strong bounce, and but back down. Similar here. This one's a slightly more of a swing trade setup, but you can probably adopt a rising wedge structure as well. But there was no bounce here, so this is the danger. I was hoping there was a bounce here, but there wasn't. Moving averages acted as resistance. Now you can see the 21 monthly moving average acting as support all the way through, and that's why this black one is going to be a major resistance as well. So if we just close in, what we're doing is going through a whole bunch of scenarios, and this rising wedge scenario is definitely on the cards, and we use it with Crypto Sniper. His middle line is also well adjusted for rising wedge, so I'm pretty convinced that this is going to be strong resistance. We got a golden ratio. So if price was to come down to this here, we have our 0, we have our macro levels 0.5 with the 21 monthly moving average. I would likely say that was a downside, and remember I said that will be either double bottom and a W shape to continue on, But I don't think that's going to happen. I think it's probably to drop more, and then we'll play that card when it comes. But we just do that, and so we've got the strong support with the 200 moving averages. Yep, on the weekly. So this is going to be a strong support. Back down, probably get a bounce, but this is the problem. So we can get that, and we can probably get this as well. So we might be able to go up. Now, if this is the bullish scenario, and we don't drop this, I don't think we'll drop it, but if it comes back down again, then we're in trouble. But it might go long again, and this could be a nice move. Now, from a macro perspective, I still see the very good possibility that this is our 1, 2, 3, 4, and then 38K might still get there. We might still get there, guys, but there's no guarantee. Yep. And if we were to add, if this was our bottom, and we do that, 1.618, let's just add the log. Let's see how high it can go. Okay, there, 36. Okay, 36 and the 34, which is pretty good for us. But that's the scenario that we can look at. Just the next macro, bigger picture, and if that's possible, let's just get away with that and bring it down to the 0.382. Yeah, we might just get up to that level there. 36, not 38. Even though I thought this is a inverted head and shoulders, we might not make it as high as we thought it might with this measured move, which is the neckline. And yeah, it might just come like that. Okay, that makes sense. Or there. Anyway, we'll see how that goes. That's how I see it, guys. A rising wedge, and there's some complexity to this area when the price comes down. A bit all over the place, but you get the gist of it. That we have a few scenarios. If this doesn't hold, 200 moving average and all the rest, then this pattern might not eventuate. So that's A, B, maybe C, and then up. Yep. But then we can also go like that as well. So this could be a resistance. If this guy breaks through it, breaks the 200 the next time down, then it's going to be resistance, and then we are going down. And what we see is our selling climax, automatic response. This is one of the models that we're talking about. Secondary test. This is our upthrust. Spring. This is one of our scenarios, and then back up again. That is one of the blue scenarios. The worst scenario is that this is Y3, this is Y4, and then Y5 is further down. It's going to be ugly. Depends what the stock market does. But that's all I got. Running out of time. Please give me a like and share. Talk to you soon. And come and join our Telegram chart or the channel, and we'll discuss it as we go. But for trading with you guys, I've got YouTube, and I do more updates there. So come and subscribe to that. Talk to you soon. Cheers.